Hello, I'm Bernard Hickey from interest.co.nz and welcome to an economic weather report brought to you in association with ASB. Today we're going to have a look at what's happening with the currency. It's that time of year when you think about perhaps going overseas and buying some foreign currency, or perhaps if you're in business thinking about what you're going to do next year and having a look at what's happened to the currency, and it really has moved sharply in the last 3 or 4 months. Essentially, we've gone from a currency close to 80 cents US down to 52 cents US in the last couple of days. Now, why is this? Well, the New Zealand dollar and the Australian dollars have been seen as part of a commodity block, but also part of a carry trading block. Let me explain. The commodity block are currencies that are quite responsive to what's happening to commodity prices, be it gold, or iron ore, or coal, or dairy commodities. And they're currencies that are also seen as quite attractive to people who are looking for higher interest rates. Now, in both these cases, the New Zealand dollar and the Australian dollar have been hit hard because commodity prices are falling and our interest rates are falling. That means we've gone from close to 80 cents to 52 US cents. It's very hard to predict what's going to happen to currencies. You almost always get it wrong. But one person who should know, he's had a lot of experience and got to a very high level in currency trading, is our Prime Minister, John Key. Yesterday he came out and said he thought the New Zealand dollar could fall below 50 cents. He was referring to the big drop in the official cash rate last week by 150 basis points to 4%. Ironically, the currency actually rose slightly after that announcement. Everyone had worked into their forecast this expected cut in the official cash rate. But where to from here? Now, a lot of people are saying the official cash rate could drop to 4% or even lower, although the noise coming out of Alan Bollard last week was that he didn't expect big further cuts in the official cash rate. And of course, the commodity price outlook looks very weak now that the global economy is heading into recession. And what we've found in recent weeks is that the New Zealand dollar tends to track what's happening in the global stock market. So when people see more news of global recession, they shunt down stocks and therefore they shunt down the New Zealand dollar. So it's a tough one to pick, but you'd have to say the forces are for a weaker New Zealand dollar, heading towards 50 cents US or even lower. I'm Bernard Hickey. That was an economic weather report brought to you in association with ASB.